So, class, I am going to tell you about pro rata allotment today. Pro rata allotment. So, what is pro rata allotment? Pro rata allotment implies the allotment of shares in proportion of the shares applied for. What does that mean? In such cases, the company adjusts the excess money received at the time of application towards the allotment and refunds the excess. The company can transfer the excess amount to calls in advance account if its articles of association so permits. Now, what is this? We will understand it by an example. So, we have an example here. Let JM Limited offers 20,000 shares to the public. So, it receives applications for 40,000 shares. When the company decides to allot 20,000 shares to the applicants of 40,000 shares, it will have to decide to allot the shares at pro rata basis. So, we can understand that if the number of shares applied for is excess than the original amount of share, then this pro rata allotment is applied. Thus, the ratio will be 40,000 is to 20,000, that is 2:1 ratio. Hence, each applicant for 2 shares will receive 1 share. This is pro rata allotment. This is what is called pro rata allotment. Now, we will go straight away to the journal entries. So, on receipt of application money, we have done this bank account debit with the total application amount to share application account credit. This is as usual. Second is transfer of application money to share capital account and refund of excess amount or money. Now, this is where the principle of this or the application of pro rata is in place. So, what would be the journal entry? Share application account debit to share capital account with the application amount, to share allotment account with the excess amount, to calls in advance account if the balance, if any, to bank account with the refund. We will say this again. Let's watch it once again. Share application account debit to share capital account with the application amount, to share allotment account with the excess amount, to calls in advance account if the balance, if any, and the bank account is a refund. Once we approach with a problem, once we do a problem, once we solve a problem, we will understand this. Next is the share allotment. When there is share allotment due. Simple, we have done this before. Share allotment account debit to share capital account. Next we have share allotment money is received. It's bank account debit to share allotment account. Next is share call money is due. So share call account debit to share capital account. And the last is share call money is received. It would be bank account debit, calls in advance account debit if there is any, to share call account. Calls in advance means if there is any call before the original call, if there is any money received. So that is these were our journal entries of pro rata allotment. So next class we will try to solve a problem on pro rata allotment. So thank you.